You're now plugged in to the Delphi podcast.
Hi guys, Jose Marie Macedo here. Today I'm hosting an episode of the Delphi podcast where I'm joined by Matty and Fab from Legion. Legion is a really exciting project. It's one we've been incubating with labs for nearly 2 years and recently came out of stealth, so it's been a long time coming. Their goal is super ambitious and also somewhat controversial: to bring back ICOs or make ICOs great again. In this conversation, we're going to discuss the current market structure and what's wrong with it, go through the history of how we got here, including ICOs, like the original 2017 ICOs, and then how Legion looks to improve on both the current market structure and the OG ICO issues. So, should be a good one. Guys, very happy to have you here. Maybe to start with, you can introduce yourselves for people and give people a little bit of your background, what Legion is, and kind of why you decided to work on it.
Yeah, definitely. Thanks for having us. Looking forward to this podcast today for sure. I'll kick it off with a quick personal background. So Fabrizio is my name. Originally comp sci background. Worked in consulting for a while. Worked in freelance for a while. Worked in startups for a while. Then went full-time crypto founder in DeFi space. I think like maybe to touch on why I'm sort of interested in this domain. Growing up, I guess to cut a long story short, I grew up broke, living off food stamps, moving between different countries, different households. Not having access at the place I was in, at least considered normal access. I think to some degree, I sort of, from very young age, for better or worse, grew sort of a hatred for systems that locked people out before they even had a chance. I always sort of associated myself with the underdog, and I thought to myself like, okay, if I'm not gonna have the same access, I need to work harder. When I was like 10, I stopped eating desserts, cake, sugar. I stopped watching TV when I was 11, and I'd allocate all my time to like work harder, just to kind of get on that same equal petting. And I think like this is where I sort of fell in love with crypto, is the idea of like literally you have internet connection and you have desire, like you can make anything happen. Doesn't matter where you live, doesn't matter your race, your gender, your location. This idea of decentralization, this idea of democratization. I think it's like I drew a lot of that, and that super motivated me. What I touched on before, obviously I've been a founder, I've been an investor, I've been a network participant. I've sort of seen capital formation from a lot of different angles. I think like this speaks to me in the sense that right now I believe it's a very broken system, and I'm super motivated by bringing in that democratization of access back and doing it in a way that's beneficial for projects, beneficial for investors, and more beneficial for long-term outcomes.
That's awesome. I didn't even know all that. That's super cool. Yeah.
Yeah, Fab is
Maddie.
pretty intense background. I'm not going to try to match it, obviously, but yeah, for myself, before crypto, professional background in traditional finance, like many people, was at Ray Dalio's hedge fund, Bridgewater Associates, and I think there, also an element of noticed how just hyper specialized and inaccessible the traditional finance market is, right? Especially coming from seeing my friends who have gone to from public high school, like the level of financial literacy they had versus the people I was interacting on a daily basis. There's just this wide gap. And so after about 3 years at Bridgewater, kind of burned out on finance, spent some time as a data scientist, Web2 machine learning founder, raised VC myself. But throughout that time, I've been investing in crypto since 2015. And some of my favorite memories all time, thinking back to it, are those 2017, 2018 ICOs, right? Even the ones I lost money on, to be honest, right? It's just a fun time to be in crypto. Just a great way to get involved, and it grew the industry so much. Obviously, there were excesses. We'll get into that, but I loved that time, and I've worked now for multiple projects in the space that have done ICOs, including some of the largest ICOs at the time, including some of the first and only SEC qualified ICOs for Stacks, which is a top 50 project these days. So I've seen the power that comes from diehard communities that are born from ICOs, and I think that's the piece that's missing from modern token distributions. And I've done a lot of work, written a whole open source guide around token distributions, and designing tokens has gotten a lot of good reviews. And so I was really excited to join Fabrizio in fixing this problem, because I think if teams can build an organic community and leverage them, then they can really achieve anything.
Yeah, underrated co-founder. I think all the time, always at conferences, everyone's like, "Oh, you're Medi Tokenomics. I've read your book. I love it." So yeah, and I think to state the obvious, we are both the two co-founders. Obviously, we've got a broader team, but
Very cool. Yeah, this leads us nicely onto the next question, which I think to understand ICOs, you kind of need to really understand the current meta, how it works, and really what's wrong with it. So could you kind of walk us through what's the standard way that the best projects right now are like raising money and then launching their token, and why is that broken?
Yeah, I could take that one. So, yeah, I mean, like, there's sort of this unspoken playbook for the best projects, and there's also probably a spoken playbook for the average projects. We can maybe touch on both. But I think on the good project side of things, it's like it almost always starts off with, venture capital, typically significant amounts of venture capital at a low valuation early days. And then most essentially of the price discovery happening in the private markets for, the pre-seed round, the seed round, and so on. Like this complete opposite of what I mentioned before. I fell in love with crypto for the idea of like democratization at any stage and getting involved. Typically raising lots of financial capital, then teams will mostly run some sort of points program or some sort of incentive. Essentially, that enables them to show that they've got a lot of adoption for whatever it might be, the right reasons or the wrong reasons. And then they can use that adoption and plus the capital that they've already raised to negotiate with centralized exchanges, ideally on a day one listing. Also engage with the market maker. They give the market maker typically a lot of the float, so they can control the price and manipulate it. And then on top of that, market makers typically have no fees trading on the centralized exchange. Now, what we briefly mentioned on it before is like a lot of the private market price discovery happens, which leads to these sort of inflated FTVs. So obviously continuing like the valuations up and up and up and up by the time they actually go public. Retail gets to buy in at typically at the highest valuations that these market makers are typically sustaining for a short period of time. That leads to after that ongoing vesting, founders, venture capitals, essentially continues to push the token market cap down over time. This leads again to capital rich, especially good for the early, but also typically community poor. Essentially, the evangelist, the typically end user of the product, they are getting absolutely burned. And I think you see today a lot of maybe hate's not the right word, but dismay with the current meta and setup being on the retail investor side. Because at the end of the day, that kills adoption and project's ability to scale from the earliest stages. I guess, like, why is this even important in the first place? I'm a firm believer that, working in disruptive innovation, it's not just about the tech. You also need some sort of like community or early supporters to sort of push that forward. I think there's that adoption curve where you talk about like super early innovators and then leading to the early adopters. I think it's like if you can galvanize those community supporters behind you, you can essentially create an unforkable moat, which again is atypical of crypto, but communities are super powerful in that track. I guess on the other side, the projects that probably can't raise from high quality venture capitalists, they kind of have two different options, right? One is like don't raise any capital and then try to purely bootstrap an idea or give up on it, and the other one's like try to find capital from anywhere, which might be like much lower class venture capitalists that add no value or looking just to flip, treat it purely as a financial exchange, or they'll basically take an idea to these like public launch pads. They're decentralized. They're not kind of gate kept by anyone. You can launch a token, but the issue with that is like they're unregulated. They have worse exposure. Projects that do that almost never make it to the same tier as like a Binance launched token, and then that essentially leads them to raising less. It hinders growth, because of regulation issues. They can't get listed on centralized exchanges, and it sort of creates this negative feedback loop where price performs worse, etc. And on top of these decentralized launchpads, essentially because you have a lot of projects that are lower quality raising on them, that leads to attracting lower quality community members where they're either in it for two reasons. One, they're just going to invest in every single sale, hope one makes enough money so that they can exit, or two, there's some sort of information asymmetry or misunderstanding of the current setup that people come and invest in, and they don't understand why token price is going down. That's like super high level, touching on the current meta. Again, I think Maddie touched on this before. It's like there's a complete lack of community building through that process, only to the end stage. And to be honest, it's probably pretty good for the insiders. It's pretty good for the early investors, but not so good for the retail investors or people that are getting access at that later stages. Especially not good for the long-term success of a project.
Yeah, that's a great description. So to summarize, if you're a high quality project, you're going to raise VC from some brand name VCs. You're going to raise like progressively higher priced rounds, and then you're going to basically like raise one right before you're planning to go public with your token at some valuation that leaves enough upside for those VCs that they feel like they can squeeze out of public markets. Then day one centralized exchange listing, right? We've seen this over and over the last year. Huge volume, like huge valuation, and sort of it's kind of down only from there for most of them, right? Where there's just unlocks, whether it's like airdrop unlocks, and obviously the airdrop's another big part of this, right? That you sort of touched on, which is when you go live, you don't have an ICO or a way to distribute tokens, so you have to like give them away for free.
Yep.
Right, with a zero cost basis to these participants that may or may not have added value to the network. Like normally, like for some projects, there's a way to do it where you do it to people who did add some value, but for a lot of them, it's just like I need to give away tokens to get some float, so I'm going to do this airdrop. Then it goes live, goes sort of down only as unlocks happen. And then for like the projects that can't do that, that can't get the centralized exchange listings or like legally conscious or whatever, they're doing like DEX listings or if they're even worse, like I guess going through some of these launch pads, and that has the performance has been terrible on those too. And even the good projects who do DEX listings, I think have underperformed quite a lot. Um, and yeah, the nature of DEX listings also makes it super hard to get to centralized exchanges, right? Because it's hard to fake volume on a DEX, and so you always look like you're trading. Not fake volume. I don't want to say like market makers are faking volume. It's just the way the incentives are set up on a DEX versus a centralized exchange. It just makes it way less attractive to to have high volumes on. Um,
Yeah, yeah,
yeah,
I was gonna say
go ahead.
previously, like I think that's spot on. Like previously, as I mentioned before, founding projects, speaking to market makers and people that help with listings, they essentially like, yeah, whatever you do, don't launch on an X because you can't control like the price as well. You can't show enough volume. The centralized exchanges, they want two things. They want new users to come and onboard, and they want to see significant amounts of volume because that's what drives their incentive, right? More volume, more revenue for them. And yeah, I mean, you don't typically get that on the decentralized exchange. As you said, very difficult to go from DEX to SEX.
Yeah, interesting. Um, Okay, and how so how do ICOs, how does Legion fix this like at a very high level? We're going to dive into it more later on, but yeah, why does ICOs kind of fix this meta?
Yeah, I can speak to that. I mean, I think at a high level, what is missing, as we've mentioned, is community involvement, and we touched on multiple aspects of this, including an airdrop being kind of like this almost afterthought way of trying to involve community. And I think the way to solve this is to not make community an afterthought, to make it more central. And so, if you speak to anyone, right, I've probably spoken to hundreds of teams about their token distribution strategy, how they view a public sale, an ICO. The number one blocker is regulatory compliance risks, right? Shouldn't be a shocker to anyone. Teams, if you can raise from VCs, the risk of alternatively going and raising from retail people and taking on regulatory risk is just super high. The risk reward doesn't make sense for higher quality teams. And so the number one thing Legion does to fix this is regulatory compliance. We get into the specifics. We'll be operating under MECA, new regulation in the EU, markets and crypto assets. And Legion handles all of this compliance for you. So it's not like we're just saying, oh, projects, here's a million steps you need to complete in order to work with us. No, we've got the KYC, of our users handled for you. We've got a license ourselves. That aspect is then handled for projects so that they can launch tokens with relatively less risk. But the other piece of this is if you want to distribute tokens to community in an authentic, meaningful way, and do so alongside VCs, not just as this afterthought after VCs, then projects need to know that they're actually getting value from those retail investors, right? They can't just be getting with that like a bunch of bots, a bunch of Sybils, a bunch of people who just plan to dump the token as soon as they buy it. And so we also have built out this layer for investor reputation and accountability so that the projects can filter down and say, these are the types of people, these are the types of things I want in my community, filter to investors that have those aspects, maybe give extra allocation to them, maybe customize a discount for them, right? They have the power to do whatever they want to assemble their specific legion of investors and then bring that community in and hold them accountable to delivering value long term. We're going to get into it, but if they don't add value, right, if they're just there for the wrong reason for short term, then they will lose out on future opportunities. So that accountability and that compliance really shifts the incentives and allows higher quality projects to give larger portions of their tokens to community, build out a community at early days, and that's going to be product advocates, evangelists, people pushing the project forward from day one. I think that's the biggest change. I don't know, Fab, if you have anything to add to that.
No, I think it's spot on, to be honest. I think, like, yeah, just to be super clear, we're definitely not anti-VC or anti-retail. I think the way I think about it, my mental model is more like, rather than being like venture capital or, retail or dumb money or whatever it might be, I look at it on a scale as like there's certain people and certain entities that add value, like value creators, and then there's certain entities that extract value, right? I think it's like, for us, we kind of look at it like, okay, how can we flip the script to understand, like, how can we maximize the value per dollar invested for these projects to essentially ensure that they get set up with success with high quality network participants, high quality venture capitalists, whatever it might be. So I think, like, again, both add value. There's both good. There's some really bad. There's some bad retail. There's some good. We kind of, again, flip the switch, focus on optimizing for value add network participants.
Yeah, I really like that thing you guys say, how your first 10 hires or whatever make the culture at your company, and your first 100 community members set the culture of your community. Made a lot of sense to me when you first said that, and it's like it sort of like bears the point home of why would you give away your token to random people, or even like with the traditional ICOs, why would you just let anyone buy
Yeah.
and make price the only sort of like with the price you're willing to pay, the only condition to being able to participate in your project, right? It really doesn't make sense, especially early on. Um, yeah, and then the regulatory point, we're definitely going to dive into it more, especially as we go through the history of kind of ICOs. But that was really important, right? I remember when Gabe
Yeah.
first told me like 2 years ago about MECA and how this thing creates a framework for ICOs, and it's sort of regulation is what originally, because I think if you had to summarize like the kind of problems with ICOs, I'd just say like adverse selection, right? Like
Mm.
all the kind of problems on the demand side and supply side come from that. And regulation sort of killed ICOs, made the adverse selection really bad. Like only the scam projects really could take the risk. And now I think regulation is going to bring ICOs back, and you guys are going to hopefully fix the issues with traditional ICOs. So speaking of that, how did we get here? Like we had ICOs in 2017, right? We raised hundreds of millions. All of us were here for that. Um, can you tell us a bit? Can you walk us through like the history of ICOs? Like what was good about them? What was bad about them? Why did they go away?
Yeah, I can touch on that. I guess, like, super high level. First ICO, actually, Mastercoin back in 2013 by Willett. There's actually this like killer old school video you can find on YouTube now, back at like an old Bitcoin conference, where he's like talking about this idea to a crowd, where he's saying like, and I've been trying to tell people, you don't need to just go to Silicon Valley and raise from venture capital. If you have an idea and you have a group of respectable developers, you can say, okay, everyone that buys this token will own a piece of what we're building, and anyone can do that, right? And I think it's just like such a powerful like change of momentum there. Obviously, like Vitalik, 2014, the ETH ICO, and then I think, like, macro conditions, as well as BTC, I guess maybe probably caused BTC and ETH started pumping. People started reinvesting the gains, seeing like the ETH ICO worked, and plus a lot more interesting use cases being built on top of Ethereum. ICO sort of like rose to prominence in 2017, 18, etc., and started making mainstream media. I guess, like, you can definitely argue that it was, crypto's first killer app, maybe the app that enabled the people that involved crypto to scale by a magnitude or more. And I think that's kind of like really high level brief period running up to that. Before touching like beyond that, I want to say, like, ICOs, again, they were paradigm shifting financial instruments, right? It's like anyone, again, like I touched on before, you have internet access, you have at least some capital. It could be, I don't know, 0.1 of an ETH to 10 ETH. You can participate at the earliest stages. And obviously, tokenization, coordinating real world behavior at scale, is one of its superpowers. The ICO essentially was a super effective way to distribute that alignment among, again, a lot of different individuals that aren't just receiving the token for free, but they're actually fronting up capital, which, again, there's like a lot of different psychological biases you can get into. They feel a lot more sense of ownership. You've got a lot of people with the primary incentive alignment of tokenization. They're coming together, again, individuals sharing common goal or identity that forms strong social bonds. That leads to more cooperation, more collective action, more positive reinforcement, and you have this like wild, hyper accelerated loop of people coming together, bonding together, just on the internet, different countries, etc., for a common purpose. Token price go up, very easy primary incentive driver. So that kind of like continued to kick off. At the same time, you had democratizing access, which I touched on before. It's like there's no Silicon Valley Boys Club, or there's no like, you need to be based in a certain jurisdiction. Like anywhere, anyone could participate. All the red tape was removed. There wasn't like lengthy things you had to go through to get approval. You can literally just spin up an ICO, see address, etc. And on top of that, for the project especially, is like no longer were you kind of restricted to a local capital market, but you had access to this global pool of capital, which again was typically immense. I mean, for like United States, for example, was well capitalized. Like still for them, it's impactful. But you can imagine coming from like a third world country, like the opportunity there was absolutely crazy. And I think it's like we kind of talk about like the ICOs were so good that they became like crazy easy to abuse. So I think, thanks BitConnect, CentralPay, a lot of scams, a lot of people recognize like, wow, this is like a mental market. You don't even need to do anything. You can kind of come sell a dream and raise heaps of capital, which kind of brings us to like the first two problems was around like absolute fraud. Like people weren't even trying. They're coming trying to take as much money as possible. Next day exit, keep things anonymous. And the second one is like absolutely no accountability. Like even projects that were trying to do the right thing, they like fell over, didn't do anything. Maybe the funds were captured by like the foundation, and then they could live off that foundation fund essentially for life and not be held accountable. And I think it was 2017, after the DAO hack, that the SEC had 21A report on the DAO published. And essentially, a new chair, Jay Clayton, came in. He essentially used that to say, like, okay, the DAO actually passed the Howey test. This is actually considered a financial instrument. Obviously, there was a lot of public opinion because of the hack, and that's kind of like what took it initially mainstream for the SEC to investigate. And this kind of introduced like a wave of regulation, both on the fraud side and the non-fraud. This essentially led to, again, bans in different countries, kind of the shutting down ICOs. And if you look at a chart where it's like basically vertical up and then vertical down, the amount of ICOs that transitioned from the 18 to the 19 period. And like this had, again, a lot of second order effects, but this led to projects that, again, were high quality, said, okay, definitely not going to take that risk to shut down the project. That kind of opened up a lot of the current meta where we are today, private market investing or accredited investing, completely leaving out retail to the end stage. Or for the projects that, couldn't even achieve that, they said, okay, I'm happy to take a lot more risk on in the effort to raise in a decentralized way. Obviously, KYC is too much. We're just going to go to market like this, etc. And to some degrees, for these founders or projects, they said, we almost like absolve ourselves of our entrepreneurial duty in the sense of like, okay, it can't be revenue generating. So if we're not going to be revenue generation, let's just ship a governance token, or we'll just tell everyone like we're not even trying to build a revenue generated product. So I think like a lot of these tokens with no value capture as well kind of like led to this negative incentive, which again was a second order effect of the regulation.
Nice. Yeah. I mean, the when you talk about the positives of like community forming and people coming together around the internet, for everyone, for all of us who went through ICOs, it's kind of hard to remember that bit, right? You just remember like the When Moon kids on Telegram or whatever, or I need price to go up right now. All the memes that came from from I'm overinvested by a lot, like all the memes that came from ICO days. So yeah, I guess what do you see as the big, because ICOs definitely had some issues with them, right? Like fraud was one of them, but I think there are other issues too, like projects that raised. I mean, one example, I hate to hate on specific projects, but the Golem one, right, where they raised like 6 years ago. I went to see they're still in like, I think it's not even a beta. It's like something like less than a beta, and they're sitting on like 9 figures of ETH in their treasury, right? And like their descendants will forever live off this Swiss Foundation ETH, right? Like they're set. Everyone's set for life there. Um, and then there's I think other issues too. I'm curious, like what do you think about that? Like, didn't they lead to a bunch of rugs, like a bunch of Swiss foundations that are set for life? Like, well, yeah. Well, is there a reason they went away in the first place? I guess.
Yeah, it's a great question. Like we have to acknowledge, right, that ICOs were not perfect, and we are not advocating for a copy paste return to 2017. This is an evolution of ICOs. So yeah, to go through some of the most common problems and kind of how we think about mitigating them. Obviously, as you mentioned, fraud was a big, the number one problem, and so better risk disclosures go a long way to that, right? Like people actually being honestly told what the project is doing, who the team is, who's behind it, right? Having that transparency that back in the day an individual retail investor didn't really have. A VC could go in and demand a meeting and get access and ask a bunch of questions. The average investor had no access, had no transparency into kind of the true risks and objectives for the project. So better risk disclosure, which comes partially from regulation, partially from quality control of our platform of the projects, is key, right? And so that quality control of, look, we're not investing in projects that cannot raise from top tier VCs. These are projects that are able to raise from top tier VCs, and then intentionally also including or allocating right to community because they see the value of doing that, and because of the second piece of investor reputation, which ensures that they're actually able to get valuable investors on their participating in their sale. And so the investor reputation piece also solves a lot of problems that the ICOs had, because sure, fraud was one of them, but also just really poor quality investors, right? You had the gas wars, right, which was the term at the time for people just paying a bunch of ETH, right, bumping up their gas fee so that they could be the first into the sale contract, right, and then they win allocation, right? So gas wars, it was literally just a race of first come first serve, which is probably not the best sale mechanism if you're trying to attract the best quality investors. So instead, you got a bunch of sniping bots. You got just Sybils. You got industrial farms. You got people dumping the token, and so that also is a big piece of the problem that we need to solve. And it is solved around the investor reputation. And then there's aspects that you referred to, Jose, of the probably doesn't make sense for teams to be raising like 100 million all at once in one shot, on a white paper, right? And so we think, again, this is an evolution of ICOs where one of the relative benefits of VC rounds is that you're doing it in these progressive tranches, if you will, right? Like first you're raising 2 million, maybe, then you're raising 5 million. Then once you've de-risked and have a live product more, you're raising another 10 million. That aspect we think works better than raising 100 million all at once, but you still need access to community, right? And so this is about an evolution, giving people access to each of those rounds, pre-token or liquid token, not just saying we're going to copy paste the 2017 model.
Yeah, that makes a lot of sense. Yeah, for me, when I think about it, and like when I hear what you're saying, I just see like sort of adverse selection all the way down, right? Like when with 2017 ICOs, it pretty quickly became that as regulators began to go after them, like investors had to do so many things that made, well, sorry, like there were so many things that, so many dynamics that made it so much worse for investors. Like,
Yeah.
first of all, what we talked about before, only the projects, like the really good projects, can raise from VC. Why would they risk an SEC enforcement to do an
They're not
ICO,
going to.
right?
Yeah.
And then the second bit, like the valueless token, right? All these founders that had to say that their token was valueless, they couldn't put cash flows through it, like all this stuff. It made it so that every token was just a medium of exchange kind of thing.
Yeah.
And then on the demand side, you have like and this is what, like, I think the investor reputation thing you guys are working on is so important, just being able to pick your cap table, because these auctions, like, they work in economic terms to like price something like an oil right, or like these things that they were designed for. But what they ensure is that only the people who are willing to pay the most get in, right? And that's not necessarily what you want for your community. Like
Yeah.
the people who are willing to pay the most aren't necessarily your best community members. In fact, you're
Oftentimes
very
the
likely,
least informed,
yeah,
right? Like, yeah.
exactly. And they're gonna have the highest expectations. They're the most annoying. So I really think like having the reputation score and being able to hand pick your cap table is like such a big deal with this.
Yeah.
Yeah, there's definitely like an
Yeah,
interesting dynamic there where it's like in the private markets, right? It's like there's a two-way opt-in, right? You vet the investor vets you. You come to like an exchange, you got an expectation what the future is going to look like, the ups and downs, etc. Where in like the public markets, you don't get that. It's only one way. It's like everyone vets the
yeah,
project, but the projects never get that opportunity to, like as you said before, design what their ideal user base of token holders look like, who they want to share that incentive alignment with.
yeah, absolutely. and in this case, it's sort of every sale becomes kind of semi-public or semi-private, however you want to think about it, right? Because you get to choose. You can choose VCs,
Yep.
you can choose angels, you can choose your legion.
And projects can customize
Yeah,
it, right? They could say everybody gets, $1,000 max allocation, but people who meet these criteria get a $10,000 max allocation, for example.
yeah, absolutely. Um, Maybe we can go into the Legion score. Actually, should we start with? I think it's worth starting with Mika, just because of how important it is. Because I think this would none of this would be possible without a regulatory framework that that allows um, that allows projects to feel comfortable. They're not going to get enforcement letters for doing this, right?
Yep.
Like it just past few years show that like ICOs just being a better mechanic isn't enough to get them used because people don't want to get like you need regulatory compliance to be there. So could you talk a little bit about like MECA, how it works, and like how this allows ICOs, how projects can what kind of investors can projects target, like that whole thing.
Yeah, I
Sure.
can take that, and Maddie, if you want to chime in as well. I mean, like Mika, first off, market and crypto assets regulation. It's again EU wide, so European Union focused, but all countries, again, difference between regulation and individual countries' legislation. Essentially, like if you're going to sum it up, MECA is about appropriate disclosure. Like, is it the core thing that the whole reason MECA kind of exists today is they recognize that like, okay, these crypto assets are actually, they're different things. They should be treated differently. Most important thing here is that there's some level of investor protection that people that do end up purchasing or participating in these sales have a good understanding of the risks that they're going into, right? Trying to remove that information asymmetry that was very prominent back in the ICO days. Which I think in principle is like fantastic, and we're very aligned with supporting that. I think like much like I talked about before, how you had regulation kind of come in and completely like change the incentive model for raising capital formation, market structure in crypto. It's like now we're kind of approaching this new horizon where Mika's coming back in and trying to bring things back to making it again more accessible. So I think it's like a why now, and like we'll touch on this a little bit more into the future. But it's like it's a very pivotal moment for capital formation. Like a lot of people are kind of sick with the current meta, right? I think it's like it hasn't been able to be changed, and without MECA, it won't be able to be changed. But again, appropriate disclosure allows projects from anywhere to raise from European citizens. Now, there's different type of exclusions if you meet them or not, exemptions, but typically you'll have to publish this thing called a MECA white paper. It's not a typical white paper that talks about like technical aspects. It's more of like, this is a roadmap, this is how we're going to allocate the capital, these are the risks, etc. Something again that should be widely available for investors to read and get to a good understanding. Does this make sense or not? I mean, there's like a few other things. You have to get an opinion that your token is not a security. EU's taken not a lax stance to this, but a lot more open stance to what what they'd consider the equivalent of a financial instrument. It's been very, very friendly. And then on top of this, there are a few other bits and pieces, such that there's a refund period of 14 days that you can say, okay, actually, I think I've made a bad decision. You want to avoid FOMO, you can actually request a refund. Now, of course, all this we kind of bake into the Legion product. So there's kind of two things. Like there's a time change now because sort of opening the door for bringing in a new meta, and then there's also the piece around needing support regulation. I can tell you right now, I've never filled out as many forms and documents in my life than we have getting the licenses and moving forward on MECA. But again, we handle all that. Now, the real benefit here comes from the fact that removing all the legal gray area, but projects from anywhere can now raise from European investors with no need to have an accredited or approved investor status. It can literally be anyone in the EU can participate. And we think like that is super powerful.
That is super powerful. It is a little bit more burdensome, right? When you're talking there, a little bit more burdensome for the project founder. I guess you have to do this white paper, you have this refund period, but the benefit is you can raise from yeah, like maybe talk a bit about those trade-offs.
There is that benefit, but we do automate a lot of like that is kind of abstracted behind the scenes for people. So
Mm.
the refund period compliance, for example, like that's handled by Legion itself, right? And investors can request their refund, but given the mechanisms we're using, given the disclosures that are being made, given that you have this double opt-in, as Fab mentioned. We don't anticipate that being a widely used option, right? This is more about like people just FOMOing in and instantly regretting it, which is going to be much more common in traditional ICO kind of setting. Yeah, so I think we try to handle this as much as possible for teams up front. The KY like users are KYC'd on our platform, so you could pick from that pool. You don't have to worry about integrating your own KYC or manage your own risk there. The refund is handled for people, and we've also partnered with service providers that can do things that are working on things like automating, the generation of your MECA compliant white paper, just to minimize that overhead as much as possible for teams.
Mm-hmm. And so who can you reach with this then? You can reach, like, is it anyone in the EU, or is it just accredited, like self, or the equivalent of accredited people that self-certify as having over X net worth? And then what about the US and then the rest of the world? Maybe you could go like in those
Yep.
three. Yeah.
Yeah, so the EU doesn't use the term accredited, but they have their equivalent, right, of like qualified investor, right? And most
Mm-hmm.
jurisdictions around the world have some kind of term for what they would call, sophisticated investors, right, that separate you from a normal person. The nice thing about MECA, one of the biggest benefits, is that it does not require you or limit you to only involving what they would call qualified investors, right? They're equivalent of accredited investors. You can sell tokens, include anyone from the EU. And MECA governs who you sell tokens to, not who is selling the tokens or where the tokens are coming from, right? So MECA says these are the sets of rules you need to follow if you want to sell tokens to persons in the EU, but does not require that the team or the entity issuing the token is a European team or located in Europe or anything like that. So you get this flexibility, you get this benefit, and honestly, it will soon be a requirement, right, for projects that want to do this compliantly to be MECA compliant if they want to include EU persons in their community. The US, unfortunately, for the time being, non-accredited US investors are still blocked out. Hopefully, things change soon with that, and we're going to be at the forefront of that by being MECA compliant, being a market leader, ready to react as soon as options become available. But there's nothing to prevent teams from doing a Reg D offering, which is how all startup funding is done, even in Web 2, right? When you talk about a startup funding raise, that is what's called a Regulation D offering under the SEC, and that's compliant because it only involves accredited investors. And so that's still an option. There's nothing mutually exclusive about doing a Reg D offering and separately, doing a Reg S MECA compliant offering, for example, on our platform. So those options are for EU persons and for US persons, and then for around the world, that's really at teams' discretion of which additional jurisdictions they want to include in their raise. From our point of view, from Legion's point of view, we cannot work with jurisdictions that are OFAC sanctioned, that are on the blacklist, right? Like your North Korea's, that type of country. But if you're being MECA compliant, you're doing your offering under our regulatory license as a crypto asset service provider, and you want to include additional jurisdictions that you believe are low risk for your team, then that's something we can facilitate, and we can help get those legal opinions as needed on the status of the token as it is in regards to that jurisdiction. Fab, anything you want to add as well?
No, I think you covered it pretty bloody well. I think the only other thing to touch on here is like we're super long on the idea of MECA and this idea of regulation covering multiple countries. And I guess our thesis on this is that while it is pushing the boundaries, I think a lot of countries should recognize that, like, okay, MECA is actually world class and world leading. We hope that a lot of these countries do adopt it. Obviously, as you said, United States is notoriously the difficult one. It's election year; you never know what's going to happen. But yeah, we're very much working on a day-to-day to hour basis to try to ensure that we can bring back to the roots what we're talking about, like open access to everyone. That will be the ideal state. But right now,
Nice.
MECA is a good start to that.
Nice. And then I think that's good on the regulatory side, which is super important. And I hope some of the projects listening to this can kind of get some comfort from this and realize that ICOs are now an option, or I guess will be once MECA is. And what is the timeline on MECA? And is it like set in stone? Is it one of these things where it can change like last minute, or yeah, what's the scoop there?
Yeah, Mika's been
Yeah.
happening, to be honest, for almost 4 years now. So it's gone through many iterations. I mean, there's always minor changes, but I think on like the macro level, it's pretty set in stone. Mika's already started to be rolled out as of mid this year being 2024, for whoever's listening to the podcast in the future. And then they've been focusing on e-money, for example, e-tokens. But yeah, due by end of this year, we should have the first like compliant MECA ICOs being able to be launched and be raised.
That's awesome.
Yeah.
Okay. And on the Legion score, all right, let's move on to the Legion score. One metric you guys talk about a lot internally is this maximizing value add per dollar raised. Can
Yep.
you maybe talk a little bit about that, like the intuition behind it, and I guess how the Legion score helps you achieve this?
Yeah, awesome. So yeah, the Legion score is the implementation, right, of this reputation, this investor reputation that we've been referring to. And just to set the stage, right, when we've spoken to all these projects, yes, of course, they're first and foremost concerned about regulation, but their second concern, not far, behind regulation, is well, if I could already raise from, accredited angels who I know on a face-to-face basis or VCs who I know exactly who I'm working with. I know exactly like their investment thesis. I know the terms of their investment. Why would I go and sell tokens to these anonymous or pseudonymous, wallets, right? I have no data. I have no assurances that they're investing for the right reasons, that they actually care about my project at all, that they're even human beings to begin with. And so that's what Legion Score speaks to, is letting projects quality control and give merit-based allocation to their ICO and really customize not just the quality of investors that are participating, but also the kind of characteristics of the investors that are participating. And so it kind of breaks down into multiple different factors when we think about the Legion score. We can get into a lot of detail on this, but I'll give kind of a general summary first. So there's various different inputs that go into the Legion score, and all these scores, these sub scores and achievements and et cetera, are all aspects that teams can kind of customize and filter by if they want to select who they wanted to participate. And so part of that is we look at people's clout, right? Their social influence on networks like Twitter and Farcaster. And this is an input that is, like all of these, been engineered to be very abuse and exploit resistant, right? We're using inspired by what's called eigentrust, which is a open source algorithm for determining kind of global reputation from local peer-to-peer relationships. And so that's kind of the inspiration for everything we've engineered. And so your clout score, for example, is not just a function of like, oh, you have X number of followers, and if you increase your number of followers, your score goes up. No, it's more richly determined by kind of the shape and connections of the social graph, right? And so you have your clout score, you have your developer score, which is based on your developer activity, right? Which GitHub repos have you contributed to? What is that activity? It's again not just a simple function of like, oh, more stars or more lines of code, higher score. No, we've made it very exploit resistant. You also have your on-chain score, so measuring kind of your activity on actual chains, whether they're Ethereum or L2s or even Solana as we expand into SVM. And so a measure of your activity on chain, have you been a loyal user throughout the bear and bull markets, or do you only show up in bull markets, for example? So we're looking at social impact, developer impact, on-chain activity, and then all of those are kind of, you can think of them as pre-investment type of scores, right? They're kind of somewhat, at least a degree, independent of your activity on Legion or with the projects you invest in. We also, though, do consider, once you've made investments on Legion, what founders or their community managers that they delegate to, how they review you, right? Or what they say about you or what they don't say about you compared to what they say about their other investors. And so this endorsement score basically holds you accountable, where if you're going to be value extractive and you just invest and then dump the token, and someone says this investor promised to make these introductions, promised to be adding value in this way, never did, well, guess what? Your Legion score is now going down, and you are going to be less likely to get opportunities in the future. So what does that mean? You're incentivized in the moment to add value, to invest in projects you legitimately want to contribute to, support long-term, add value. Because if you do that, you're going to get more opportunities in the future. If you do the opposite, you're going to get less opportunities. So you get almost like a social slashing element involved, which really changes the incentives and changes the dynamic. And so yeah, we consider all those factors and more, such as how and when you sell the tokens that you purchased on Legion. So all those roll up into your Legion score, and this is a tool for teams to not only hold investors accountable again, but also customize their offering. So for example, they could say, we want to give a discount, or we want to give higher max allocation, or we want to whitelist, people who have a certain social following, or who have contributed to certain GitHub repos, or have a certain level of developer activity, or who are power users of a certain DeFi protocol, right? Or use bridges a lot. All these aspects you can customize and find your community that you want to distribute your token to.
Yeah, I think as well, just to touch on that,
So
is
cool.
like, if this is gameable, it won't work.
Yep.
Right? There's no possibility that this will work. And I think it's like, like I mentioned before, one of my last projects, or one of my initial projects, we did a campaign with actually XDeFi and 3Galaxy, and the numbers we reported was like 100,000 people participated, and we looked at the on-chain data, it was 6. We had to laugh. And it's like, if it comes down to that point, there's like completely no use to it. I think the other thing that Maddie touched on is like, there's definitely the economic incentive model for future opportunities on Legion, but there's this also idea that that people essentially are fronting their reputation, their social capital here to a public place, where if they act in a bad way, they're essentially forego that social capital, right? And that's like reputation on the line. Reputation is like one of the key things that drives industry interaction. So we're removing that pseudonymous or completely anonymous person just promising that they'll do something and tying reputation to that. And I think that's also makes it super powerful. And again, to touch on like the scoring mechanisms, like humans are very complicated, right? It's impossible just to say, okay, this human is a number, right? So there's like the quantitative data that we look at, but there's also the qualitative side of things. It's like a very complex thing, assessing like, okay, what's the relevant experience they look at? That's kind of akin to the on-chain score. What's their engagement and influence? That's kind of akin to the clout score. What's like their contribution potential? That can tie in with the dev score, a few other things like the past contributions that should come from the endorsement scores, reputation, trustworthiness come from an endorsement score. So it's like they kind of have like, yeah, kind of funny and relatable names, but like they are fundamentally rooted in some very interesting thinking.
Yeah, and just to be clear, like people can remain pseudonymous, right? Like you can still be behind alias, for example, but we're attaching reputation to that pseudonym, right? And you're carrying around this from each sale. So sure, there could be Sybils, but you would have to defeat KYC, and you would have to attach all these value add things, your GitHub activity, your social activity, and then be willing to basically sacrifice that and start from scratch if you were to burn your reputation, right? So it drastically reduces, or drastically increases, I should say, increases the cost of doing Sybils and doing bots and these sorts of activities.
Makes sense. And I guess to cover like the intuition behind this, like the sort of maximizing value add per dollar invested, the way I see that, and the way the kind of Legion score improves that, is just that there's a lot of like, everyone who's raised money knows that sometimes there's like an angel that invests like 10K and ends up adding the most value out of anyone. Maybe it's their first angel deal. It means a lot to them. They're out to prove themselves, and you just get the most value out of that 10K check. And then on the other hand, there's VCs that will invest millions of dollars and do very little other than like the basic introductions and stuff like this. And really like that, it's sort of understandable, right? VCs have normally like a staff of 5 to 10 and like maybe 100 portfolio companies. So you're getting 1/100th of those people's time, plus all the new deals they have to do, right? Where most of their time is spent on new deals. And obviously like it doesn't scale that much with like with the size of the VC fund. So it tends to be that the bigger the round, the more they invest. Like you're not really getting more value add for that. And speaking as a VC myself, and there's also a lot of differentiation between them, right? And what you want as a project is really, you want to maximize the value add that you get for every dollar that's invested in your round. So if you can get all from like angels that are super motivated to add a lot of value, that's kind of ideal. Um, and you can kind of see this happening already, right? With the current rounds where founders will do like VC rounds at like X val, and then they'll do an angel round at 0.5x, right? And that, I think that is kind of proof that founders are using the situation. They're like, VCs are adding less value, and so they're worth less to me, and they need to pay more to get into my round. And so I I guess the way I see the Legion score, it's just a way to help founders like do this calculus, right? What's done right now through like word of mouth and like your network can just be done more easily through this sort of like really multi-factor like reputation score and yeah.
Yeah, it makes it more transparent, and it makes it, the big like household name VCs and accredited angels have that reputation just because they're well known in the industry. But this kind of extends that to everybody, even if you are this first time investor or you, yeah, haven't yet built a big footprint.
Yeah, exactly. All right, I think people understand how Legion works now. One question I had is why now? Is it just Mika that's going to change this? Because this has kind of been going, this meta has been in place like at least since 2020, 2021, right? So like for a
Hmm.
couple of years, it's arguably working for some people, right? The centralized exchanges sort of benefit from it. To some extent, insiders benefit from it because they have higher paper value to use on incentives, to use for hiring, to use for like points campaigns. VCs kind of benefit, although they're mostly locked, but I guess they get higher paper marks to raise new funds. Um, like a lot of people have tried to do different flavors of like launch pads, I guess, over the last few years. Like, why is now the time? Is it mainly Mika, or is there other something else too?
Yeah, I'll just speak to this quickly, and the Fab, yeah, welcome to join in. But I think Mika is certainly a part of it. But I think beyond that, it's just compared to 2017 when there just simply weren't that many projects out there, right? Like it's a much more competitive landscape these days, and you have lots of capital rich teams or teams that are rich in capital but poor in community. And I think community is what makes the difference, right? As we've said, the first 10 employees you have defines your company culture. The first 100, first 1,000 token holders defines your community culture. And that community is ultimately what's going to make a difference in adoption and decentralization and pushing the product forward in making a difference, right? Having a few large investors on your cap table can't meaningfully decentralize the project, right? Can't lead to widespread adoption in the same way that a widespread base of loyal community members does. And so I think smart, if you look, one of the signs, for example, is what you just mentioned, Jose, of like these projects doing these raises where they intentionally give a discount to a broader base of like angel investors. Smart projects and smart VCs are kind of waking up and realizing community is super important. It's vital, and it's actually better if we invest alongside the community instead of shutting them out, right? And so VCs, at least the top tier VCs, are realizing that they can get bigger returns in the long run by involving community rather than just taking everything for themselves and trying to shut out, retail, which is not exactly what's happening right now. It's a kind of a mischaracterization, but taking a more friendly approach to widespread distribution of the token is a key step. And I do think there's signs that people are waking up to that importance. Fab, anything you want to add to that?
Yeah, I don't think there's too much to add. I think you covered it pretty bloody well. Maybe the only thing is like, yeah, for right now, this actually is super advantageous for a select few. I think like they probably don't want things to change too much. But again, for the for kind of like our mission and what we're trying to achieve, and I think like it will lead to a much better long-term outcome for not only funding the projects of today, but they're the projects that will be existing in the future for their success as well.
I think you're muted, Jose.
My bad. Um, yeah, and so the ultimate that all makes sense. The ultimate goal for you guys, I guess, is to democratize. Actually, maybe we can start with this. Let's say in 5 years, Legion has massively succeeded.
Yep.
It's like matched or exceeded all your kind of wildest expectations. What does that world look like? Maybe you can walk me through like how do projects raise money? How do they launch tokens? What's the life cycle look like? Like, are they coming to Legion like super early on? Are there still VC rounds, but are those happening like through Legion, what are your, like maybe you can kind of paint a picture for us.
Yeah. Yeah. So now, I mean, you have existing teams coming to Legion raising, but I think in the future, you would have founders, everybody has a Legion score, everyone has reputation, including founders themselves. And so you'd actually on Legion have founders meeting, forming teams, right? Projects coming into existence via Legion with maybe some early followers and some involved, team members. They're raising via Legion for their first checks. Maybe VCs are also investing alongside separately or via Legion as the rails for that investment, and forming their community. All of that is happening on Legion, right? So Legion becomes this place where projects are born rather than where they only come necessarily to distribute the token. And I think the reputation layer that we've built, right, is this holistic insight into every investor, founder, developer, right, community member, their track record and all the projects they've cared about and all the projects they've added value to push forward. So I think, that's a little bit glimpse into what the future looks like, where it's still top quality projects launching here. The rails are all still on chain for the investments, right? It's all smart contract driven investments, but you have this richer kind of ecosystem surrounding it of teams forming, building, raising, launching, leveraging their community all via Legion.
Yeah, I think maybe just to like chime in on that, this may be a little bit more future thinking. I mean, 5 years is a very long time in crypto, first off. But I think that, when people typically think about capital formation, they think about financial capital formation, right? So essentially you raise financial capital, you use that capital, you deploy into production capital. Production capital is used to achieve XYZ goal for whatever the venture is. When we talk about the world and the dynamics and democratizing access, is like not everyone has financial capital to contribute, but there are a lot of people that have, social capital to contribute, creative capital to contribute, developer capital contribute, etc. So
hustle
maybe
capital.
Hustle capital, yeah, you name it, right? And I think it's also a really interesting thing to think about. It's like, what does the future of like, in the purest thing, the future of like an organic idea spawning and being able to find the right capital. Maybe it's not financial capital, maybe it's production capital to come together to create something that changes the world. And I think like facilitating something like that into the far future is also super interesting to think about. And again, the reputation layer, without it, something like that would never be able to be achieved.
I love that. Yeah, I mean, you could say like launching tokens is crypto's killer app, but we're not necessarily doing it super well right now. And I even think like capital formation is so broad. Like I always love Constitution DAO, right? Just a bunch of definitely bull market phenomenon, but yeah, a bunch of crypto people coming together to try to buy the Constitution. And it feels like if you had these primitives, these reputation scores, like a platform with like significant distribution, it would be so much easier to bootstrap, social capital and financial capital to do stuff. And it's like it's a really exciting vision. Okay. I kind of want to end on that. I had a few more questions, but I feel like ending on that note is pretty good. You guys wanna maybe say some last words? Also point people to where they can find you, where they can find out more, how they can get involved. I bet a bunch of people are gonna wanna. Is there gonna be a points program? Is there any advantage to signing up? Like, yeah, give people the lowdown there.
Yeah,
Take it away, Maddie.
On that last point, I mean, we're very much committed to leading by example, dog fooding our product, right? We're focused on MECA compliant offerings at the moment. No U.S. persons can participate in sales, but to the extent we can, we also want to have a very widespread distributed community of users because we see the value in that, and we definitely want to lead by example as much as we can. So yeah, stay tuned. There will be a points program and all sorts of news coming out soon. Be sharing the white paper. But Fab, do you want to kind of give everyone where they find us in your last thoughts?
Yeah, I'll wrap her up. So everything
Sweet.
on socials, Farcaster, Twitter, the website, legiondot.cc. So legion.cc, you can find us. If you're a project, keen to chat. If you know any of the, like if you know Jose or and the Delphi guys, reach out. I'm sure they'll connect us. You can also go through our website. There's an apply as project option there. I think like you'll get direct to Maddie and I, where we like to keep things super flat. super lean. So you'll be speaking directly to us. I think it's like if you're mission aligned and you're keen to bring back ICOs, if you want to say like, okay, instead of raising a large treasury in our own native token, that's what we want to do to raise an ICO. And then we have stable coins to deploy instead of having to sell our own token. Like if you're mission aligned with any of what we've said before, like definitely come speak to us. It doesn't really matter what stage you are. We can support the pre-liquid token stuff. We can support the token launches. We've been cooking up a lot of stuff on that front. And then on the investor side is like, if you can deliver value to projects, we are going to give you a chance to make it. So come swing by, join
That's
socials,
awesome.
and get involved.
Thanks very much, guys. This was great. Yeah, thanks everyone for listening, and see you next time.
Thanks, Jose.
Thank you.